Alright guys, what's poppin'? It's your boy XO, and in this video I'll be showing you guys a really simple forex trading strategy with 100% win rates. I'm just kidding guys. So this is going this oh shit. This come on man. Alright guys, so this will be a video about the EMA plus the Fibonacci. Alright, this is a very ridiculously good strategy, tested and trusted. But do not go crazy on this because every strategy end up losing and winning at the same time. So don't take my word for it, right? Be careful, take your own risk, and I am not a financial advisor. Right, this is just a strategy I've tested and has worked for me over time, and it's still working up to this point, and I've been using it to take trades here and there. So let's get straight into the video. Okay, so this will be a very quick video showing you guys how to use the EMA and the Fibonacci retracement tool to take a trade when it comes to the forex market. And this strategy works in any pair, like in any markets, in the financial instruments, in the stocks, the indices, the index, Nasdaq, Bitcoin, crypto, wherever. Right? This strategy works. Stocks, ETFs. This strategy works on all instrument. All right, so let's get straight into the video. Right, so what the first thing first you want to do is bring in your EMA. You want to go to the indicator section and you search for EMA and you put in this moving average exponential. Right, so I already have this on my chart here. I use the EMA 200 period, and what the EMA does is it separates the market trend. All right, if the price is above the EMA, it means that the price is in a buying trend, in an uptrend. If the price is below, if the price is above, did I say above? Yeah, I did. If the price is above the EMA, it means that the price is in a buying phase, in a bullish phase, in an uptrend. If the price is below, obviously that means the opposite. All right, so if the price is below, it means that the market is in a downtrend, in the bearish market, in a descending market. All right, in a selling market, whatever language you want to use to look cool. Right? So it all adds up to market is down or the market is up. So this EMA helps us separate price. It splits price into two. There's only buying and selling in this industry. So it tells you when the market is in a buying phase and when the market is in a selling phase. I know why I'm emphasizing on this so that you guys get to understand what the EMA freaking means. All right. But if you're confused, you can ask me a question in the comment section, and I will love to answer you guys' questions. All right. So real quick, how the strategy works is we want to see market below the 200 EMA, and we want to see a breakout of the 200 EMA and a retracement back. But we will not just blindly take a trade on the retracement, so we need to use our Fibonacci retracement tool. So at the last high the market made before it broke out, so this is the last the last low the market made before it broke out with this kind of stick, and this is the last high the market made before it retraced. So if I should zoom this out and come right here, we want to take our trade at the 61.8. guys, I repeat, do not take a trade at the 38.2 or the 50, because markets usually like to fake out on this zone. So you want to take a trade at the 61.8 too, because the chances of you losing on this 38 and 50 is way higher than losing. Like I just don't know, because I've been using Fibonacci for a very long time, and I'm used to just using 61.8 zone. Like I've seen this 50 and this 38 get destroyed in the market, like annihilated, like completely destroyed in the market. But most times this 61.8 tends to stand the test of time. I'm not saying it works all the time, but it actually survives more often than than not. So what you do is you come to this point, and since it's breaking above, you want to look for a buy, but if it's breaking below, you want to look for a sell. All right, so at this point, like I said, your trade at the 61.8, and your stop loss, oh my god, this is too huge. All right, so your stop loss will be slightly below the 61.8 zone, just like this, and you want to target a 1 to 2. I recommend every beginner to take 1 to 2 of their risk on every trade. You can do 1 to 3, 1 to 1. No, I do not recommend 1 to 1, guys. At least a 1 to 1.5 minimum, but I recommend a 1 to 2. That's better. All right, so you can see this trade was a beautiful win, right? A beautiful So guys, like I said, it was a beautiful win, but like I said, there's always a losing and a winning side in the market. So you are not just gonna take all your trades and end up winning. I don't want to be that guy that will just come and show you, okay, it worked here, it worked here, but I want to show you that it actually also loses too, So yeah, we took, let's say we saw the setup. As you can see, price was above, but you know what, I just want to show you guys this example that it doesn't work all the time, because some people might end up taking it like this, so they might end up losing. But I'll tell you the reason why this particular trade we lost wasn't a good setup, right? Because if you notice at this point, the market was strongly below, all right, it was below this EMA, and it broke out. But you can see the market was not strongly above the EMA, but it still broke back down. So I would likely not take this trade, but let's count that as a loss. All right, so let me look for one more example and get back to you guys. Alright guys, so real quick, this is a beautiful example right here. So like I said, it really doesn't matter if you took those two trades I mentioned, but as you can see, the market was above, and it broke down, and it came back to retest this zone. So you can just decide to take any of the break and retest and other stuff, but you can see that this trade also ended up being a win. So it all depends on what you want, guys. It all depends on what you want. Like you can see, this one, looking at it alone, I can see that this was a losing trade. All right, this was a losing trade, and going back, as you can see this point. This is the last high the market made before the breakout. This is the breakout. This is a previous market high at this point, and this is the last low the market made before it retraced back to the 200 EMA and ended up touching this, this 61.8. So if you're taking this trade too at this point, yep, clearly that was a winning trade. All right, so yeah, that was a winning trade. So that's all for this video. I just don't want to make this video very long, so I hope you guys enjoyed this video. Please test the strategy out, because I said I'm just showing you guys what works for me. Might not work for you too, of course. So but you seeing this now, just go back and test the strategy. Okay guys, that's all from me. It's your boy EMA, and I'm signing out. Stay EMA.